Hello guys, welcome back to channel, and today we did it. We passed the funded finally. Pretty much I can show you right here. 53,000 I finally did it. This is the third funded that I passed in a row. So it's been pretty much nice to see how I am developing my trading, and to share it to you guys. And I mean, if this helps anyone, I mean, it helps, right? So let's see what was the trade about, right? Let's go to the replay mode so I can put you guys in my shoes and see like what was my logic behind the trade. As you can see, it was kind of a strange trade. We were obviously in a very bullish day, but I traded short. And even though it was not the best entry, I will explain it to you guys why it was good enough to trade it. So let's go on the replay mode so I can again do this step by step with you. So let's see. On the, well, this is kind of loading. As you can see here, I mean, the only thing that I pretty much did was to mark this dealing range. And as you can see, it was not very interesting. I mean, it only has two noticeable low volume nodes, like this one and that one. And also it works because this is a high volume node. So again, I always place my low volume nodes in between that are like in the borders of the high volume nodes. So I place the low volume node above and the low volume node below. Okay, so yeah, we pretty much just mark that. And here, as you can see, we had this consolidation right here. So I mark it and maybe just much. Yeah, whatever, it's pretty much the same. I don't know if I moved it, but there you go. There it is. And yeah, the Virgin consolidation, I don't mark this one because I think it's a lot of noise, especially if it's overlapping with the opening range. You can absolutely mark it. I personally don't because, well, as I said, I just think it's noise mostly, most of the time. Because look, if we mark this, another Virgin consolidation, I mean that it can be a good reference point. It is a high volume node, and if you remember, high volume nodes attract and slow down price. So yeah, I mean it can be interesting, but I don't like to mark it. At least the only thing that I mark it is just the point of control. I think it's pretty clear that this is a high volume node, but okay, let's leave it marked. You win, guys, you win. So let me skip this a little bit until the opening range forms. And there you go, it formed the opening range. On the opening range, um, I mean the high volume node, the point of control, it is kind of sitting above the middle, so it is. That means that price discovery was dominated by buyers, and right here we're extending downwards, and this would have been a hell of a long if you cut that, because again we had like kind of these equal lows, like you see here and you see here, those are equal lows. And also on the opening range, as you can see, it is 162 points. It is it is wide. We opened at 30 34.2. So 30 34.2 it is. Yeah, I mean we opened based on the last uh, on the previous session value area, we opened within value. So with a wide opening range and we opened inside of value, what that tells me is that there is a high probability of this day being a double time frame condition, aka consolidation. So you may see things like this. We go up, we go down, we may go here, we may go here, here. But at the end of the day, it is balanced market conditions, right? So, as you can see, I'm sad that I didn't took this trade because it was still very early, and as you can see, the opportunity was there like seriously like 30 seconds, 1 minute at most. So I was just starting my PC and everything. And yeah, it's sad because I missed it. But again, look at this. Aggressive delta, aggressive buying with the big trades. We are extending downwards. We extended downwards. We rejected the extension. So placing here a buy order and maybe aim for the point of control, or if you want, you can aim to the highs or even to the low volume node. I mean, the greater the reward, also the greater probabilities there is for your trade to just not hit. If you want your trade to hit, very probable, aim to the point of control. If you want bigger reward but a little bit more of risk, and I'm not talking about risk like you're moving like the stop loss or something. It is just that you risk, like for example, if this moves to the point of control, but then it retraces and goes down, with the point of control you would have been good, you would have hit full TP, or maybe it can do this, and it can consolidate and you go out break even. So that's the risk I'm talking about. I'm not talking about like you have to lower your stop loss necessarily. You're not increasing the dollar risk. I'm just talking about you're increasing the probabilities of your trade not holding or not hitting full TP. Also, if you aim to the low volume node, that it is very premium. It is such a nice trade, don't get me wrong, 200 points almost. But again, maybe it goes right for a moment. Hey, you know, it's going right, it's going up, it is going up. Oh man, now it's going lower, and now I'm either break even or I touch my stop loss. So the probabilities of the trade to fail increases. I'm not talking about dollar risk, I'm just talking about the probability of the trade not working. So yeah, I mean, this is just pretty much subjective. If you want a a home run, you can totally aim for it. It is totally valid. But just keep an eye on it. Because if you're in the middle of the movement, you know, you are like, let's say you're already up 3R and then the price starts a little bit tailing, the rotation factor is going lower, just take your profits. So yeah, I mean that's pretty much the first trade that there was. And as I said, I'm so sad that I missed it because I was not there fully, and at the time where I caught it, where I where I was aware, when I was aware of the movement, it was already too late to enter. I don't like to enter in the middle of the opening range. I like to enter at the extremes. And pretty much Dalton says that a lot of times. Don't enter in the middle of the opening range. Don't enter here. I mean, don't place a trade here. Because yeah, your idea might be right. Like for example, if you are here and you say, you know what, it is still the same, so let me just go up and aim for here. Yeah, you can be right, but the difference between the guy that got into the trade early and you that entered late, the difference here is that you're more subjective to the volatility of the market. So, I mean, yeah, the trade can do this. It can then retrace. It can then, I mean, go a little bit up, then a little bit more of drawdown, and then go up. Totally can do that. If you see here the difference, the first trade, you're break even. On the second trade, you're already stopped out. Unless you want to increase the risk, that, I mean, you can totally do that. It can be valid to put your stop loss outside of this structure. It can be totally valid, but if you want like kind of the same risk to reward that the first guy had, then yeah, you're more subjective to volatility. So that's why I mainly don't enter on this. Um, yeah, that's why I just don't like to enter in the middle of any movement. I like to place my trades in a good location that allows the trade to breathe and also will tell me if I'm wrong fast. For example, if I enter on this long, and let's say I aim to the point of control, to the highs. If the trade goes here and then goes down here, I mean, I'm fast quickly. Why? Because based on my approach and on the logic, we're in a balanced condition, the price going down by a lot will automatically, will automatically beat my bias. My bias no longer holds. So, and for example, if you enter late, if you enter here and you place your take profit outside of structure, it is still the same thing. You are wrong, but you are wrong later. You are wrong with a greater risk. Because if you are here, if you place, let's say, your stop loss under this low, again, you can just get stopped out and end up being right. On the other side, on the first trade, if you're wrong fast. Like you're not subjected most of the time to being right, but the trade being wrong. So that's why location matters, okay? And that's why I didn't enter. It was an A plus, triple A plus setup, but sadly I didn't solve it. So hey David, what did you took? Okay, let me go for it. So at the time, yeah, it was pretty choppy. This session was pretty choppy, but the benefit of learning auction theory is that even in the choppiness, you can find some places where you can actually trade. Because again, you don't have a subjective framework. You don't have to guess, well, I mean, this 1 minute inversion, but also there is a fair value gap in the 2.3 minute chart, and there is also an unmitigated order block in the 7 minute chart. I mean, you're not subjective. You don't have to worry about those things because the price is fractal. Price action is fractal. And auction theory actually helps you to, um, how do you say, to delete all the noise and just focus on the important thing. And that's two questions. Where does the market wants to go and how good of a job is it doing going that way? So that questions will probably filter out 90% of the noise. Will make you filter out 90% of the bad trades. Because yes, maybe the 2 minute candle did this and that's my entry. But if in reality, if you're going long, but the market is actually going down and it is doing a good job doing that, even though you may call that a AAA plus setup because everything aligned, if the market it is still doing a good job going down, doesn't matter. It doesn't matter really the amount of confluences that candles gives you. It doesn't matter. Why? Because the market it is going down and it is doing a good job going down. That's just what matters, the fundamentals. So again, I mean, yeah, I think I jabbed enough. Let me see if I can just go to my trade because yeah, I mean, I traded kind of late. It was at 10 p.m. on my country. It was at 10, no, 10 p.m. no, 10 a.m. Sorry. So let me just skip this a little bit. And yeah, as you can see, oh, holy crap. Okay, yeah, we're back at this. Yeah, sorry for that mistake. I intended to put the speed on 1, but I put it on 1000, so already the whole session was spoiled over, but still I want to show you the logic of my trade. At this point, I mean, it's very clearly, if you actually took the long that I talked about, I mean, you if you aimed for the what? For the low volume node on the premium side, I mean that it would have been a banger trade, like 200 points. That's why I'm sad that I missed it. It was such a good trade. But anyways, just forget about that. And I actually entered. Some people may call me crazy for my entry, but I actually went short because I wanted to catch a little retracement. I was just like $400 away from passing my eval. So what I wanted to do at this point it is to catch a momentum trade. I mean, location in this case, I mean, yes, we're going up, but it's already too late to go up. It's already too late to go long. So I wanted to catch a momentum trade to either the long side or the short side. So my first confluence, if you call that, it is that on this period, on the every 3 minute candle is a period. On this period, we were not doing. Yes, we did higher lows, but we did not did higher highs. So on a rotation factor, that's 0. That was my first signal. Also, if we go down to the range charts, and there is a lot of trap buying here. So if I wanted to catch a momentum trade, it should have been right now. I entered on the trade. I just pretty much aimed exclusively for what I needed. to pass the account. I mean, I needed like $520. So I wanted to have right here a momentum trade. I mean, there was a little bit of aggressive here, aggressive selling here. Also, we're touching the low volume node. We're trying to go up. We're failing at it. Even though in the macro context, we may rip this low volume node, on here on the micro context, we're struggling to pass it. So I'm expecting responsive selling. I'm not expecting initiative selling because I'm not expecting this to actually go up. I'm expecting I'm expecting responsive selling. I'm expecting for a response to this whole uptrend, and that's pretty much just the logic that I applied on this trade. As you can see, first we actually went down by a lot. I mean, on the range chart, 80 and maybe 20, so 100 contracts of aggressive selling are present here. So that's the momentum trade that I was planning to do. So yeah, I mean, again, there is aggressive buying, but since we have momentum here, that aggressive buying may become absorbed for a moment. And as you can see, we actually hit full TP. God damn, I did it again. We actually hit full TP. I mean, I exited maybe like a little bit upwards, not on this low. But yeah, that's pretty much the plan that I had to. It was not a trade location. I mean, yeah, you can say that we had the wide opening range, so you can expect a normal variation, and this was pretty much just a normal variation day. If you look at it, I mean, we consolidated a little bit higher, not so far away from the opening range. But what I wanted to catch was a momentum trade to the downside. And I did not want to hold that trade for too long, because if I'm in a normal variation day, that means that price will probably go back to my entry. So if I held it like right to the point of control, I would have been out break even. So on this trade, I just wanted to, I'm going to trade maybe like 5 micros. I want to have a small, just enough momentum to pass my account, and at the same time, I just, I just said like, you know what, I'm going to place 5 micros on this trade, and I'm just going to aim for the exact amount that I need to pass my trade. So that was pretty much the whole logic about this trade. And yeah, I mean, you could have said that, hey, just wait for the long. There was a lot of momentum going long, but at the time that I took the trade, as you can see here on the chart, we were making lower highs and lower lows. So I think it would have been pretty obvious that a responsive selling movement was about to happen rather than an initiative bullish momentum. So, I mean, yeah, that was pretty much everything that I did for today, guys. So, yeah, like and subscribe if you learned something new. I I'm pretty happy that I passed my account. I'm sad that I missed this trade because, yeah, passing the account with such a beautiful trade would have been way better than relying on a momentum trade, because for myself, momentum setups are maybe like A minus, B plus, and just fading the extensions for me will always be triple A plus. But I mean, it was still an A minus setup. I would call it A minus. And yeah, I mean, not the prettiest way to pass the account. It is still a very valid trade, don't get me wrong. It had a nice logic behind it. But I mean, just for the looks and just for the Instagram feed, I don't have an Instagram, but just so people can, I mean, just imagine this trade, like, seriously. It was such a nice on the, it was such a nice long. Yeah, I mean, would have been a pretty trade, but hey, that trade made money, my trade made money, so that's all that matters. So, yeah, guys, I'll see you on the next time. And now we start again trading funded accounts. So, see you guys.